Welcome back to HustleWise UK. Every year, thousands of UK side hustlers make the same mistakes with HMRC. Some of these mistakes result in unexpected tax bills. Some result in penalty charges. Some result in compliance checks and investigations. And the worst part is, most of these mistakes are completely avoidable. In this video, we are going to go through the biggest HMRC mistakes that UK side hustlers make every single year. If you are earning any income on the side from selling, freelancing, renting, driving, delivering, or anything else, this video is for you. Let us get straight into it. A quick disclaimer before we begin. Everything in this video is for general educational purposes only. It is not personal tax or financial advice. Tax rules can and do change. Always check the latest guidance on Gov and UK, or speak to a qualified tax professional for advice specific to your situation. Now let us look at the mistakes. The first and most common mistake is not registering for self-assessment when you are supposed to. Many side hustlers do not realize that registration and filing are two separate obligations. If your gross trading income goes above £1,000 in a tax year, you are required to register for self-assessment. The registration deadline is the 5th of October following the end of the tax year in which you earned the income. The UK tax year runs from the 6th of April to the 5th of April the following year. So, if you earned side income during the 2025 to 2026 tax year, your registration deadline is the 5th of October, 2026. Missing this deadline is a failure to notify HMRC. The penalty for failure to notify is a percentage of the tax you owe, and it is based on your behavior. If HMRC considers it a careless mistake, the penalty can range from 0 to 30% of the unpaid tax. If it is considered deliberate, the penalty can go much higher. Registering late is always better than not registering at all, but registering on time is always the right approach. The second big mistake is confusing gross income with net income. All of HMRC's thresholds, including the £1,000 trading allowance and the self-assessment registration threshold, are based on gross income. Gross income means the total amount received before any fees, platform charges, postage costs, or other deductions are removed. Many side hustlers look at what actually landed in their bank account, the net amount after platform fees, and compare that to the £1,000 threshold. That is the wrong figure to use. If your total gross receipts across all your side income activities are above £1,000, the threshold has been crossed regardless of what you received after deductions. This is one of the most misunderstood rules, and it catches many people out every year. Always calculate your gross income first, then apply the trading allowance, or deduct actual expenses from that gross figure. The third mistake is claiming both the £1,000 trading allowance and actual business expenses at the same time. You cannot do both. The trading allowance and actual expenses are two separate methods. You must choose one or the other for each tax year. If you choose the trading allowance, you deduct £1,000 from your gross income and pay tax on the remainder. You cannot then also claim individual expenses on top of that. If you choose actual expenses, you list your real costs, materials, equipment, subscriptions, and so on, and deduct those instead. You do not then also apply the £1,000 trading allowance on top. The right choice depends on which method gives you the better result. If your actual expenses are higher than £1,000, claim actual expenses. If your actual expenses are lower than £1,000, claim the trading allowance. Claiming both in error can result in an inaccuracy penalty. The fourth mistake is declaring only some income and forgetting the rest. Your self-assessment tax return must include all of your income from all sources in the tax year. This includes employment income, self-employment income, freelance income, rental income, savings interest, dividends, income from selling goods online, gig economy income, and any other income you have received. Many side hustlers only declare their main hustle income and forget about savings interest that their bank has already reported to HMRC, rental income from a spare room or property, small freelance payments from multiple platforms, or casual income from one-off jobs. HMRC's Connect system cross-references all of its data sources. If it finds income that is not on your tax return, it will raise a query. The responsibility is yours to declare everything. HMRC does not ask you to declare only the income you remember. The fifth mistake is missing the 31st of January deadline. The 31st of January is the deadline for two things, not one. It is the deadline to file your online self-assessment tax return for the previous tax year, and it is also the deadline to pay any tax you owe. Many people file on time but do not pay on time, or they pay on time but forget to file. Both are separate obligations with separate penalties. If you file late, the automatic penalty is £100 from day one. After 3 months, you are charged £10 per day up to a maximum of £900. After 6 months, a further penalty of 5% of tax owed, or £300, whichever is higher, is added. If you pay late, you face additional surcharges of 5% at 30 days, 6 months, and 12 months. Interest is also charged on unpaid tax at the current HMRC rate. Set a reminder for the 31st of January every year. File early and pay early. The sixth mistake is not keeping proper records of income and expenses. HMRC requires all self-employed individuals to keep records of their business income and expenses. These records must be kept for a minimum of 5 years after the 31st of January filing deadline for the relevant tax year. Records you need to keep include all invoices and receipts for income received, all receipts and evidence for business expenses claimed, bank statements showing business transactions, and any other documentation that supports the figures on your tax return. If HMRC conducts a compliance check and you cannot produce supporting records, it can disallow your expense claims and estimate your income, often resulting in a higher tax bill than what you actually owe. Poor record keeping can also result in a separate record keeping penalty of up to £3,000. Keep records organized throughout the year, not just at tax return time. The seventh mistake is mixing personal and business spending and then claiming personal costs as business expenses. HMRC only allows expenses that are wholly and exclusively incurred for business purposes. If you buy something that has both a personal and a business use, you generally cannot claim the full cost as a business expense. Many side hustlers claim personal phone bills, home broadband costs, clothing, meals, and travel that are not genuinely business-related. HMRC is actively targeting overclaimed expenses in 2026. Careless errors in expense claims can result in penalties of between 15% and 30% of the additional tax due. Deliberate inaccuracies can result in penalties of up to 70% of the additional tax. Only claim what is genuinely, wholly, and exclusively for your business. Keep receipts for everything you claim. The eighth mistake is labeling a trading activity as a hobby to avoid paying tax on it. HMRC does not accept a self-applied hobby label as a reason for not declaring income. HMRC looks at the facts of how an activity is conducted. If you are buying goods with the intention of selling them for a profit, if you are regularly and consistently making sales, if you are actively marketing or promoting what you sell, if you are operating in a business-like way, then HMRC will consider it a trade. And trade income is taxable. The frequency and regularity of your activity, the scale of your sales, your intention to make a profit, and whether you are set up in a systematic or organized way are all factors HMRC considers. If HMRC reclassifies your hobby as a trade, it can go back several years to collect unpaid tax along with interest and penalties. If your activity has any business characteristics, treat it as a trade from the start. The ninth mistake is not knowing that digital platforms now report your earnings directly to HMRC. From the 1st of January 2024, all major digital platforms are legally required to collect your personal details and report your total earnings to HMRC. This includes platforms such as eBay, Vinted, Etsy, Airbnb, Amazon Marketplace, Fiverr, Upwork, Uber, Deliveroo, and many others. The first reporting deadline was the 31st of January 2026, covering the 2025 calendar year, This means HMRC already has a record of what you earned on these platforms. If you did not declare that income on your tax return, HMRC now has the data to identify the discrepancy. Many side hustlers assumed that small platform sales would go unnoticed. That assumption is no longer valid. If you have undeclared platform income, the safest option is voluntary disclosure. HMRC treats voluntary disclosure more favorably than income it discovers through its own data matching. Let us bring everything together. The 9 biggest HMRC mistakes UK side hustlers make every year are: 1. Not registering for self-assessment by the 5th of October deadline. 2. Using net income instead of gross income when checking thresholds. 3. Claiming the £1,000 trading allowance and actual expenses at the same time. 4. Forgetting to declare all income sources on the tax return. 5. Missing the 31st of January filing and payment deadline. 6. Not keeping records for at least 5 years. 7. Mixing personal and business expenses and overclaiming. 8. Incorrectly labeling a trade as a hobby. 9. Assuming platform income is not visible to HMRC. Every one of these mistakes is avoidable. Keep your records organized throughout the year. Know your key dates, declare all income, and if you are unsure about anything, always check Gov. UK or speak to a qualified accountant. If you found this video helpful, please like it and subscribe to HustleWise UK for more plain English UK tax guides. Drop your questions in the comments, we read every single one. Thank you for watching. See you in the next video.